Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and/or financial topics. So let's dive right in, take a look, see what's happening today. If you want to follow me, it's at @Finance. And if you want to join our community, finding-value.com, where I dive deeper into all these different topics, sectors, looking for investment opportunities, sharing those opportunities with everybody in the community. I do that and communicate to everyone through midweek updates, which are videos. And I also do Q&A sessions on the weekend, which are recorded and posted onto the website. You can ask me whatever you like. So almost all the communication is done through videos, and my opinions are shared through those two methods: midweek updates and Q&A sessions. There is some training on the website. I have performed training on technical analysis, so you can also see that stuff on the website as well. And if you're interested in joining up, we have a special coupon code. Special is the coupon code. You type that special in to the code and you get 50% off the first month only. On the monthly membership, it ends up being $25 for the first month only. And it's a $100 discount on the yearly membership, and it ends up being $500 for the entire year. And you have access to the website. You can see what I'm buying, what I'm doing, the companies that I am accumulating. I'm not really selling anything. I'm in accumulation mode for the cheapest assets with the best asymmetry in the market. That's kind of what I'm looking for, and sharing that with everybody. That's saying, hey, this is what I'm doing, and this is my allocation that I'll be roughly putting in it. So let's dive in. Let's take a look. We've got next week's schedule is giga bullish according to Wimmer, or however you pronounce his name. Monday, QT is ending. Tuesday, Fed starts printing money. Wednesday, PMI data release. Thursday, jobless claims report. Friday, the Fed balance sheet release. He says, or she, the biggest bull run starts next week. Well, here's my opinion. When they lower interest rates, a lot of the times that is them admitting that there is a slowdown in the market. So usually, when rates actually go down, we see a pullback in the markets, not the biggest bull run ever. Now, we'll see what happens. I don't know what will happen. I don't know if they're going to try to lower rates, but then the long end of the curve goes up, where interest rates break out to the upside. I don't know if it's actually going to go down. I don't really know what's going to happen here. So it's something to watch, that's for sure. If the economy does pick up with lower interest rates, and if we actually get lower interest rates, and if, we would see oil take off, copper take off, and they look very primed to do that. So we'll see what happens. I mean, if unemployment continues higher and interest rates were squeezing employment, then we'll see a pullback. But here's the difficult part. Copper's breaking upwards, not downwards. And oil is well poised in a falling wedge, which generally breaks higher. So I like to match the charts with the data. I don't make opinions based off just data being released. I have to see it in the charts. I have to see accumulation in the charts for me to be bullish. And a lot of the charts look very bullish on the commodity side. Do you see 1 million as life-changing money? Be honest. Yes. I think life-changing money is even before that. Life-changing money, and this is my definition of it. If you're living paycheck to paycheck and you have no savings, nothing, you're desperate as heck. Life-changing money in that situation would be an emergency fund of 6 months to 12 months, and then not living paycheck to paycheck. That right there is life-changing money, because you won't be as desperate. So it will change the way that you act, the way that you feel, the way that you sleep at night. Then the next one I would say is after you get your 3 to 6 month emergency fund, you build all this up, and then you start piling assets. You start buying a ton of assets and piling money into assets. You start crossing the $100,000 barrier, $200,000 barrier, where your investments start to grow. In the beginning, it's all contributions. It's a real pain in the butt. It doesn't feel like you're making a ton of progress because 10% of a small chunk of money is not a lot of money. After you start piling in and you start gaining some progress, I think that's life changing because it gives you hope. It gives you a vision. It gives you the ability to kind of see that you can get out of this 9 to 5 job if that's what you're doing. And let's say you don't like it. It gives you kind of like a purpose to pile that money away. And if you see good growth in your investments, it gives you life changing hope. 1 million is just an arbitrary number. It's the path that you took to get there and the lessons that you've learned along the way. So usually, if you are self-made and you are working your way on up, you get to experience the breath of fresh air at a 6 month emergency fund where you can breathe a little bit. It's like, okay, I got a little bit of wiggle room. Then as you continue to pile in and you accumulate assets, you figure out that you learn how to invest. You learn how to get returns. You learn that you want to save money and invest money. You start to learn the stock market or equities market and commodities markets. You start gaining hope. And then when you pass the 1 million mark, that's just one I'll say tick off the box, or one check off the box there. It's just a detour that you're blowing by as you're investing money because now you have momentum. Now, someone else, if they just inherit $1 million and they didn't put in the work, they may blow it. They might blow it. I don't know. But yes, 1 million is a lot of money. And yes, it's life changing in my opinion. A lot of people are like, oh, it's not that much money. BS, you go make $1 million. It's not that easy when you're starting from scratch. It took me a little while. I wasn't, I saved a ton in the beginning, and now I'm compounding, so it's feeling real good. So Grant Cardone says, if interest rates were 3%, would you buy a home? A lot of the people in the comments were like, no, 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 I don't want to buy a house, blah, blah, blah. If interest rates were 3%, house prices are going up, in my opinion. Would I personally buy a home? I would buy a home at the current interest rates. That's me. And I would buy an expensive one if I wanted to. And I'm not really that sensitive to interest rates anymore. So if I were to buy another house, let's just say in 5 years or 10 years or whatever, I'd probably pay a lot of it in cash and then borrow only some of it. A lot of people, what they do when they view buying a house is they view buying it with very little money down, and then they borrow the majority of it. And it's like, save some freaking money, guys. Like, put a big down payment down. You don't have to put only 20%. You might put 60% of the house cost down. You might put 70. Now, is that normal? It is if you already own a house and you're buying another one. It doesn't mean that you go put 5% down or 1% down. I mean, that's nothing. So the interest rate wouldn't be a determining factor for me. It would be if the area that I live in starts to deteriorate, which it's not, but if it does, and let's just say it gets a little less safe, we'll call it, then I would look. I would look and move out into more expensive neighborhoods, and I would not even think about really the cost anymore. But that would be me. Now, I'm not sitting here buying a mansion or anything like that, but I, I want to live in a nice surroundings. That's what I'll say. Years 0 to 10, contributions define your investments. Years 11 to 20, returns gain traction. Years 21 to 30, returns outpace contributions. Years 31 to 40, the money you invested decades ago now earns more than you ever thought possible. Stick with it. Investing is a great journey. Right now, I'm about, I'm probably right here at years 11 and 20 in terms of years, but I'm here where my returns outpace my contributions. Right now, I'm contributing still, but it's hard for me to make, 2, 3, 4, 5% positions. The portfolio is starting to run big time. My yearly return is far greater than any money that I've ever made in a single year. So my returns this past year blow away anything that I've ever made in a single year in terms of money. And I would hope that that continues and that there will be days, single days, where I will make more money in a single day than my yearly salary when I was working at a 9 to 5 job. And I'm pretty much almost there. I may already be there. I've got multiple accounts and I just don't look at them all at the same time. So I'm probably pretty close already. And that takes time. I didn't do this overnight. The year 0 to 10, when I was starting my journey in, say, 22, 23 years old, when I graduated college and started saving and saving and saving, it took a good 10 years to really build that all up. Uh, I wasn't as good of an investor back then as I am now. So it did take me a little bit of traction. The best thing that you can do is get a mentor where you can fast track your learning of how to invest as quickly as possible. And that at year 10, I would have been here at returns outpace contributions at year 10 if I could do that. If I had a mentor and he was a good mentor, not just somebody who didn't was pretending. I'm talking about someone really, really good. And then they could say, this is how you do it. You buy it when it's cheap. You're patient here. You wait. Keep adding in. Like all those little things, they add up, and you should be able to learn how to become more successful at investing. Instead of just fumbling through it for 5, 10 years, trying to figure it out your own way. And I was still listening to quote the experts and listening to the opinions on YouTube, and I didn't learn anything that was that great. You need a mentor, period. You need it. It will drastically reduce your learning in terms of years, and then you start earning way more faster. So that's what I would say. It says you don't realize how little 1 million is until you make your first $1 million. $1 million is still a lot of money, guys. Um, I don't even know what percent of the world has $1 million or more. It's probably not as much as you think. I mean, it's still a good chunk, but usually it's older individuals, not very young people. So I mean, if you make your $1 million and you're still in your 20s or 30s, you're killing it. You're absolutely killing it. If you have $1 million and you're 60, 70 years old, it's still a lot of money. It's just I don't think it's as much because you've had all that time to compound in terms of investing and stuff like that. If you're over 30 and successful, drop advice for younger men. Can be about anything. I would just say focus on your health. Make sure to floss, not just brush your teeth, but floss. Get a really good toothbrush too. Get a Philips Sonicare toothbrush and get in all those nooks and crannies. Make sure you keep your health in tip-top shape. Drink water. Don't drink too much alcohol. Um, and that'll carry you, I think, a long way. I did a lot of that, so I'm just saying things that I would do. Um, in terms of like like work and job, I'll just say most things are political, and it's more about who you know than your actual. I'll say your actual output and efforts. Your efforts don't matter. It should only be based on the outputs that you have, but a lot of it isn't based off that. It's based off the perception of how you're doing and the perception of the skills that you possess, not the value that you bring to the company and the delivered results of it, even if you can try to tell that. And that's been my experience. It doesn't mean that's the same experience for everyone. And what I did in my 20s is, if someone's early 20s, I set up my life where I saved a bunch of money in my 20s, where I had options earlier in my life. I'm in my 40s now, and I don't have to work. I don't have to do anything. And that's the option that I gave myself when I was in my 20s. I gave my option of myself today in my 40s. So thank you for doing that, my old self. uh, Stay out of trouble. Don't go to areas that have problems. Stay away, is what I'll say. Yeah, I don't know, guys. Like I don't know that many people that had the hard road, so to speak. A lot of the people I grew up with are very successful, either the people that I graduated in college or even in high school. I would say almost all of us are pretty successful if you measure it in terms of however you want to measure it, raising families, uh, money, financial success, all of it. We're I would say that the majority of people that I grew up with, and almost a lot of us have ended up in the top few percent of wealth and financial success, all of us. I think a lot of it dealt with um, genetics to some degree. We won the genetic lottery for some of that. Um, I would say the majority of us that I know are decently smart, have decently good personality characteristics. So we ended up at least quite successful. And then you can watch and learn from other people and see how they were successful and just imitate and kind of mimic that. So it's a combination of social upbringing and also genetic lottery, I would say, for the majority of people. A client asked, when should I start withdrawing from my Roth IRA? I said, never if possible. He was stunned. But I saved it for retirement, yes. But your Roth is your tax-free emergency fund, inheritance for hires tax-free. IRM, AA management tool, and RMD Shield hedge if tax rates rise. Spend your IRA first. Preserve your Roth for last. And I just was reading that, and I take these things into consideration. I've amassed a pretty good Roth IRA. I put some of the early investments in 2020 for oil in my Roth IRA, and it's really exploded. So I'm sitting pretty good with my Roth there, and my other 401k, which are all pre-tax, and my other ones, they're killing it too. So I'm gonna have some good options coming up when I do uh, are able to take money out. I don't know how much. I mean, there's a possibility. I could take out a whole bunch of money every single year and never deplete it. I'm probably over saving, perhaps, maybe, which is a weird thing to encounter. Some people are probably saying, "Well, what do you mean saving too much money?" I saved a lot when I was younger, guys, and now it's starting to compound. And when you get to a point where I'll just throw out numbers. If you let's say you've got $10 million and you make 10% on 10 million, well, that's $1 million. But what if you're getting up around 20, 30, 40%? Your average annual returns. Well, now you're making 2, 3, 4 million bucks a year. Now, what if you're doing that and you're only in your 40s? What happens at 59 and a half when you've got $100 million in there? Holy crap, you could take out $1 million every single year, and that means nothing. So it over saving to some degree, I might have done that accidentally, but I don't feel like I've given up on anything. I don't know. I'm curious to see where I end up, 10 years from now. Be interesting. Savings can be created by spending less. You can spend less if you desire less, and you will desire less if you care less about what others think of you. Yeah, you should see the cars I own. They- I'm definitely not making any statements with anything that I own, wear, or drive. It is truly the I don't care mentality about other people's opinions. Like, I really don't care. In fact, the majority of my friends that I have also don't care. So, anyone that I am friends with, if they are really, I'll say, if they're really worried about the money that they own or the money that they have, the car that they drive, the clothes that they wear, I usually am not friends with them. Nothing bad about them. I'm not saying anything bad about them. I just don't. It doesn't matter to me. So I don't. I don't make decisions based off any of that. Now, if there's a car I really like, and let's say I buy something because of the performance of the vehicle, and I think it would be super fun, I may do that. But it doesn't mean that I'm buying it to show off or have it mean it's a symbol or status symbol or something. I would just do it because I really enjoy the driving dynamics of the car. Steve Millionaire says, "How much net worth do you need to consider yourself wealthy?" Um, I don't know. I'm still in this phase that I don't really understand. Like I don't know what is that mark. I would probably say enough money where you can do whatever you want, and I don't know what that amount is. I don't know if it's a couple million, where you can just be like, I don't. It doesn't matter. Um, you don't know. I still don't know. I still don't know what the right amount is. If you don't have a lot of expenses, it's probably not as much as what most people think. Warren Buffett says, as an investor, you love volatility. You love the idea of wild swings because it means more things are going to get mispriced. Yeah, if you can buy the misprice. Most people can't. They just want to fit in the herd. So what they do is they get scared when the price goes down, then they wait for it to come back up. They gain confidence in the sector and it's too late. And then they just do that on repeat. That's it. Um, in order to break the cycle, you need that mentor. You need to have somebody show you, like, look, this is how you do it. And then from there on out, you change your mental mindset. And you're like, okay, that's how you do it. That's what you're using to identify bottoms. That's what you're doing when you're looking at the value of the company. And then you're loading up when it's so cheap, where you can get 50, 60, 100% more shares per dollar deployed. So each dollar you're throwing in, you're getting 100% more shares than the person who's waiting for the quote breakout. The one that doesn't understand the cycle, the one that doesn't understand the value of the company, the one that doesn't understand all that stuff. They wait for confirmation and confidence, but that may cost them hundreds of percents of, of, of gains for them to gain that confidence. Net worth breakdown in 2025, 750,000 is comfortable, 1 million is rich, 1.5 million is semi-wealthy, 2.2 million is set for life. Do you agree? And there's a lot of people talking about, money and net worth and all this stuff on Twitter. I'm just sharing this because there's nothing else that I thought was that how can I say? I know a lot of people are looking at silver because the price is going up. I get it. People are searching for silver, they're searching for gold. They probably want to be told it's going to go way higher. I get it. Okay. Um, I'm looking at this stuff, you know, what do other people think on what is wealthy? I don't think it matters. Um, when I had a lot less wealth, I would check and I would know my net worth a lot more frequently. After I hit a certain point where I thought I was pretty comfortable, and it was probably around a million, million and a half or something. I stopped looking. Like, I couldn't even tell you what my net worth is. I probably can't even guess within $100,000 right now. Because it doesn't matter. I'm not going to change anything. I'm not going to change my approach. I'm not going to change my strategy. I'm not going to change a single thing. I can't even tell you how much money I have in physical metals right now. Uh, it's a lot though. So I don't even keep track. Um, so it's a lot of people. I'm not the type. where you put it all in a spreadsheet and you track it all like to the T. And I used to do stuff like that back in the day, but I lost count. And then once you hit a certain point, it just stops. Like it doesn't matter. And I think that's when you know you're wealthy, is when things just don't matter. You're like, yeah, I got some money here, and then you're like, what should I buy with it? And obviously I'm on top of it in terms of the equities that I watch because I look at them so often, and I share it with everybody in the community and all that stuff. But um, when you hit certain levels, I don't know. It just seems like it's whatever. And then I've got like six different accounts. They all go up and down, all over the place. I lost some of them. I don't have the password because of my wife's accounts, and they're flying. I recently went in after not looking at it for many months, and I was like, "Wow, that went up a lot." She has uranium and silver junior companies and some silver producers, some oil companies in there that have just been ripping, absolutely ripping. And I have a feeling that she's going to hit in her account probably seven figures, not that far off in the distance. And I'm like, wow, this is this is crazy. Because that account, when I took it over, was only $14,000. It was 14 grand. Now we're getting up there. We're getting up almost to half a million. I took it over in 2014. 2014, when my daughter was born, she quit her job. I took it over at 14,000 bucks and brought it all the way up to almost. It's almost at about almost a half a mil, and um, just been ripping it since 2014. And I'm in commodities. I bought the bottom of 2020. We did a huge move from there on forward, and still riding it. It's in a retirement account, and I'm still not trading. I'm not doing anything different than I am in my other accounts. So uh, there's that. And if you guys want to learn how I'm doing it, I show everybody how I'm doing it. In fact, I'm building my Roth 401k from scratch. I started that in 2024, late 2024, and I'm building it in front of everybody's face. So there's no excuse. You will learn. You will see how I'm doing it. You will see that I'm not trading in and out. You'll see my purchase points, and then underneath every purchase I put in there, I have a description of why I'm buying it, the chart setups, the fundamentals, the sector, all that stuff, the ratios for things that I look at, and you can replicate exactly what I'm doing. So 14,000 into it's like 400 and something thousand. I didn't look recently, but I was surprised at how much. And there's a platinum miner that we bought at the bottom in there, an okay amount. Uh, Dividends are starting to collect in there, so that's good too. I'm gonna reinvest. Gold, silver. The decades-long cup and handle pattern suggests $700 silver price target, which is exactly the monthly supply inflation-adjusted all-time high. Now, is that something that I agree with? People ask me like, what are my price targets? I don't have price targets, guys. What I focus on isn't based off of price and the actual pattern. The pattern matters, and it looks like it's a continuation pattern, and I completely agree. I focus on is the conditions that exist for silver to continue to go up. It's the conditions that matter, not the price of a projected move on a pattern per se. Other people will disagree with what I just said there, and I'm fine with that. But as long as the conditions exist, I think silver will continue to go up. And I think silver is going to have a supply problem too, on top of it. So this big move was the end of the big bull market back here in the 70s. I think what's coming ahead is going to blow that out of the water because the supply looks pretty rough. And Mexico and some of these other areas, the supply is declining. I'm not so sure that they're going to reverse that to go higher. Energy is going to put a huge squeeze on silver. Silver goes into solar panels, its electrical connections, and motherboards and all sorts of stuff. So I'm glad that I have a large allocation to it, and I'll just continue to ride it. I'm not so worried about the price target and nailing predictions. I don't really care about the short term. I'm riding this because I think the cycle has turned already. And I'm going to ride it through the entire cycle. And riding it through that entire cycle might mean that I hold on to these for the rest of my life. I know that may be weird for people to think about. He's going to hold this for the rest of his life. What do you mean? I'm not trading this, guys. I've been in it since 2018. It's almost been, well, I've been in earlier than that because I bought some back here in the 2010s too. I bought all this whole bottom here and up here. I bought this whole area over here, really. And I view it as like my savings. So, some of my gold holdings and platinum holdings and all that stuff, it's all very similar. I just store it, my wealth, in physical metals that are valuable to, modern society. And then I don't have to do anything. I'm not sitting here trading. I'm not sitting here looking at short-term price movements. I'm not worried about relative strength indicators. None of that matters. And if we go to silver $700, I mean, that's going to be many, 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 many millions of dollars that I have just in silver, just in silver. And then if platinum also outperforms, I mean, it's going to be crazy. It's going to be crazy. And you don't need that much money if you're buying it down here at 14, 15 bucks. Every 1,000 ounces you purchase is 14,000 bucks, which was a lot back then. And it took me time to accumulate all that, but it's not unreasonable to accumulate many thousands of ounces of silver at 14, 15, 16, 17, $18 an ounce. And that's where you make all the money, is when you buy all this down here or here, and then you ride it all the way up. The people who aren't making money are the ones who are trading this crap in the short term. So, rules of investing I never break. Never own anything that needs excellent future conditions to justify the price you paid today. Excellent future conditions are never guaranteed. Low price today is. Everything that is priced for excellence is fragile. Everything that is priced for mediocrity or worse is anti-fragile. The rest is noise sold by people who do not eat their own cooking. Nassim Taleb. Just buy crap that's cheap, guys. And I can show you how to do it. I can show you how to do it. Gold and silver compared to the S&P 500, rocks before stocks. Some people are saying, oh, this is a bad comparison. Yes, I selectively chose 2000 as the starting point, but that's when the cycle bottomed and we're getting going here. Look at the vertical move we have here. This is crazy. You know what's going to follow it? Copper's going to follow this, and so is oil. And if you know the cycle and you're confident that that's going to happen, you can go buy a bunch of bottoms in oil right now if you want. I can show you the companies. Well, they're all on the website. So that's where I'm going to end it, guys. That's what I've got for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you like. And that's all I've got. So we'll catch you next time, guys. See ya.